morning, everyone. Today I just wanted to talk a bit about inverse ETFs. As in yesterday's market outlooks, I did talk and say that I was positioned in some. So I just want to talk about how I found out about them and my reasoning as to why. So I use etfdb.com as I did mention. So you put that into your browser and you'll get this website here, and then you'll see all the different sorts of ETFs. And then we find here inverse, and / short ETFs. I then will search by the average volume, by the highest volume down. And we can see here the first one is SQQQ, which is short technology stock, short the technology sector. You can also see crude oil, gold, S&P, Ultra Pro S&P. There are some that are leveraged, so ×2, ×3. I do recommend that you do some further reading into them, but basically if we look here, inverse short ETFs seek to provide the opposite return of an index for a single day. This creates an effect similar to shorting an asset class. The level of magnification is included in the fund's description, generally ×1, -2 times, -3 times. So read a bit more about that, but basically, as they say here, you can magnify your position ×2, ×3, that going short. So we pull up the charts here now, and I'll start here with oil. This is SCO, ticker symbol. And if we look here at SCO, SCO is ProShares Ultra Short Bloomberg Crude Oil. We click on this. So basically this enables you to be exposed to oil and make money from its drop that we have seen over the last couple of weeks with most other things. So this is the info. It's leverage ×2, so magnified ×2. You see the holdings, 100% sweet light crude oil, WTI. So that's the holding there, WTI. So we go to WTI here, WTI US oil, and look at this, mirror image, right? So this is the bullish version. See this massive drop, and then in this inverse ETF, we can see a massive pump as it's inverse. So I entered here. I was waiting to see this break and retest to confirm that yes, it was going bullish, and I waited for this break and retest of the 50 EMA here in red, 0.302 or 0.5 fib, the fib regions, and I waited a little longer as I wanted to see a bit further confirmation, and I waited and then entered on this pop. Now the New York session doesn't open for me being in Sydney, Australia till 1:30 a.m. and it closed at 7:30 a.m. So I had a market order set here. I was pretty confident after I saw this pop. So I bought in here, and you can see now that it's up 107% since I entered it on the 25th of Feb. So if we go back here to the bearish chart or the bullish version, you can see that it had this break and retest of the 50 and 0.302 fib region on the 20th of Feb, and then it broke down. So on the 25th is where I entered there, and it's had this continuation, massive to the downside. So as I was saying, a quick story surrounding why I was looking into leveraged ETFs, inverse, was due to the fact that when there was a big drop going to happen, i.e. a recession like back in '07 to '09, as you can see here, the top in '08 to the bottom in '09, right? So I see that and I say, well, hang on. After this big bullish trend, had a big correction here during the recession. We've currently been in an 11-year bull market. How much longer can this sustain? Interest rates incredibly low across all different federal reserve banks across the world, incredibly low. How much lower can they be for how much longer, right? And then I start adding these things on top of each other to form an opinion, a bias. And I see here that yes, it was bearish oil in the last recession. The recession, the drop before that in the 2000, same thing. So it did it once, it did it twice, and it's done it previously back in the other recessions. Look, 86 and the 90s. So if it's done it once, twice, 3 times, 4 times, wouldn't you say that a fifth time has a high probability? So that's my thinking, plus with all the other factors stacked on top. Hence, I'm thinking, well, it can be hard to get into a leverage position, trading this. So are there any other instruments that offer me exposure to make money from this falling? And yes, there are in inverse ETFs. So that allowed me to get access, hence me doing so. So this is oil. Now, a few other inverse ETFs that I'm currently in are inverse real estate. I had a position back here in August of last year because once again, I'm risking a very small percentage of my total capital on this. And based on that chart, very limited downside, a lot of upside. So with probability and all that weighing in, if I buy it a bit early, I'm prepared to hold. It's a very small amount of my total capital. So, yep, at one point it fell, I was down around negative 22%, but so what? So what? I don't mind. I didn't close the position. It's unrealized. Yes, it would have been better in hindsight to wait for this break and retest, which I did. I added another position to then average down my buying price. So I entered this on the 4th of March, so last week. Said gapped open overnight to the upside, further confirming the continuation to the downside. So if we look here on real estate sector, we'll then see the bullish version. And you can see the passive ETFs. Yep, they're breaking lower, lower low, previous low, high, potential lower high, being confirmed now with this 3, 1, 2, 3 days to the downside. Look at a couple of others. You see the same thing, lower low, lower highs. Bearish trend further being confirmed. And it makes sense because on the ETF, inverse ETF, the opposite is happening. Higher highs, higher lows. So we'll go here. This is the next one, SPXU, which is inverse the stock market, S&P. Same thing. Did get in a bit early. Didn't take an entry on this, which I'm a bit annoyed about. But as you can see, further confirming this upside. SRTY, which is small and mid cap, everything except large caps, stocks in the US. Same thing, you can type it in here, SRTY. That'll give you further information. Holdings. There you go. There's the top holdings. And when you look deeper into these equities, you'll find that they are small and medium cap stocks. So I bought that again back in August, yes, a tad bit early. Same thinking, limited down, low downside, huge upside potential. UVXY, which was volatility, similar thing, tad early again, June and in October. See this double bottom break to the upside. Volatility, which you'd expect, this massive drop has had a massive pop, which when you measure 327% already. So inverse ETFs, a good way to expose yourself to capture these moves, make the most of these movements, bearish movements, and not requiring any margin to service them like a standard Forex position would, or even maybe crypto through your broker. I just buy so many units at $20.71, the total value. Then down here at the lows of $10, say I've bought $1,000 worth. Now it's worth $500, so I've lost $500 if I sell it then and turn it to realized. But now at $45.77, or the same amount, depending on how many you bought here, are worth now the unit price of $45.77. So that's a bit of my thinking, guys, surrounding inverse ETFs. ETFDB.com. Search that for more info on them. And there's a large range. I look for the higher volume ETFs. I use Saxo Bank, but there are other brokers which I'm sure offer exposure to these. So I hope you enjoyed that, guys. I'm staying positioned in them for now. And basically what I'm doing is I'm looking at the inverse chart and applying my understanding of price action, higher highs, higher lows, and then looking at the opposing chart and combining the two, helping me to form that picture to know, is it time to exit this and take my profit, or to stay in it to continue that bearish movement. So for now, I'm staying in them. I'll keep you updated. Hope you enjoyed this, guys. That's about it for now. However, I would like to touch on one more thing, which are these ETFs in, funnily enough, agriculture. Now, due to the virus, could food and the food sector become scarce? Well, potentially. The supply reduces, the demand increases. This chart here, all-time lows, right? FUD, FUD, right? For this fund here. Next we have DBA. Same thing, agriculture, extreme lows. Corn, extreme lows. Soybeans, extreme lows. Wheat near extreme lows. And they're bearish, they're inverse ETFs. So anyway, I'm just keeping an eye on some of these agriculture sector because with this virus and all the panic and fear in the market now, which when we look here at the fear and greed index, of course, what do you think it's going to be? Extreme fear at 3. It can't get much lower than that. So with all the fear in the market currently, my thinking is we've seen across the world with toilet paper here in Australia, people just stocking up heavily, thinking that, oh, yep, the shops are all of a sudden going to be closed. The virus is going to infect larger amounts of people and things are going to close and people panic and do silly things. Some even behave like animals. So if the food sector and agriculture becomes more scarce, it would make sense that these charts showing price to be at extreme lows, that potentially a reversal may happen, may or may not. Nothing confirmed yet. What I'd be looking for would be a breakout and a retest of the 50 daily 50 EMA. But just keeping an eye on that for now, because if we do see a pop to the upside and then a rejection, I would like to potentially position myself in some of them. But just a thought for now, guys. I'll be definitely watching this to see what happens, and of course, I'll be keeping updated. So I hope you enjoyed that. Take care until next time. Over and out. Cheers. Thanks all.